This past weekend saw an escalation in the conflict in the Middle East, with Iran launching an attack against Israel. The attack was in response to an earlier airstrike on an Iranian consulate building and was notable as it marks the first time that Iran has attacked Israel directly. Previously, both countries had been engaged in a decades-long shadow war. News of the attack, which had been telegraphed in advance, had sent jitters through the financial markets. As a result, many investors may be asking, does conflict escalation in the Middle East change the investment outlook? Well, the short answer is that geopolitical tension is difficult to include into any outlook, as so much of it is naturally unpredictable. A longer answer would identify how different pockets of the market could be impacted by this event. In this case, the most relevant area for analysis might be commodities, such as gold, silver, oil, natural gas, and agricultural goods. Oil prices have steadily been creeping higher since war broke out in the Middle East in the middle of October last year. By the end of last week, in anticipation of the attack, the price of Brent crude oil, which is a benchmark for oil in the broad markets, breached $92 per barrel, its highest level since October, and gold continued much higher as well. Remember that gold is seen as a safe haven asset during periods of stress. Because neither Israel nor Palestine are producers or exporters of energy products, this rise in concerns that the conflict will continue to spill over into neighboring petroleum countries like Iran and Saudi Arabia. Also, escalation conflict could translate into increased shipping disruptions in the Red Sea, while more direct conflict between these countries would likely result in large quantities of oil supply coming offline. However, in the aftermath of the attack, prices for both oil and gold modestly fell, as the bombardment was largely unproductive and nearly all of Iran's missiles and drones were successfully intercepted. Moreover, Iran declared that its political objectives had been met with this attack, signaling a potential de-escalation in the tensions. Ultimately, investors recognize that while geopolitical headlines can capture market attention, the shocks to sentiment are often short-lived. Without a doubt, risks to the outlook are greater today than they were before this weekend's attacks, and investors should pay close attention to oil prices as the war continues to evolve. Still, a well-diversified investor with a long time horizon has been able to weather many storms over the decades. This should remain true looking forward as well. As always, please contact a qualified professional for more information on the challenges of short and long-term investing.